The global logistics industry saw a strong bounce back in 2010 as it emerged from recession, whilst the feared double dip failed to materialise. Air, road and sea freight sectors recovered dramatically. Although this growth moderated as the year went on, many metrics suggested that the industry had recovered to pre-recession levels. The industry was buoyed by economic expansion in China and Southeast Asia, and if it had not been for concern about the ailing economies of the Eurozone, in particular Portugal, Italy, Spain and Greece, and the massive deficits of other Western powerhouses such as USA and UK, confidence would have been higher still. In terms of mergers and acquisitions, there were few mega deals, although there were numerous smaller purchases. Perhaps the most notable acquisition was that of UK-based logistics company TDG by French rival Norbert Dentressangle, which had earlier acquired Schneider's forwarding business. DHL and Schenker, for many years the driving forces behind consolidation in the industry, were very quiet, signalling a period of focus on profitability rather than growth. For the year ahead, the health of the Chinese economy continues to be a vital question. Although growth in both domestic demand and export activity is still very high, the signs of overheating continue to emerge. The money supply is growing fast, driven in part by the effects of quantitative easing in the US, whilst the economy still seems hugely overbalanced in favour of investment. Wage rates are rising and the viability of the property market is in question. There is a risk that an unstable China could result in an acceleration of the shift of manufacturing and export production away from southern China. In fact, 2011 could well be the year when many emerging markets come of age. Although many of these, such as Brazil, are influenced by Chinese investment and demand, they are also experiencing growth in domestic consumption as GDP per head rises. Consequently, opportunities for domestic-orientated logistics provision in these markets looks good. Indeed, whilst top-line growth figures may be weaker, the attractions of markets in, say, Turkey or Brazil may be greater due to stable and transparent markets. This aspect may counterbalance possible instabilities in exports from these countries, such as agricultural products and mineral raw materials. Europe presents a very mixed picture, but it's important to know that its prospects are brighter than is often supposed. German growth is now being driven both by vigorous export and domestic demand, something reflected by the level of activity at German ports. This is likely to spill over into much of the hinterland of the German economy, such as Central Europe and Netherlands, and this implies sound growth in areas such as road and rail freight. Both volumes and investment in new capacity are likely to be good. Certainly the peripheral Euro states are distressed, with some governments approaching insolvency. However, impact on the logistics economy may be more nuanced. In small markets such as the Irish Republic, lower wage rates are positively affecting export-led growth, whilst in Greece, the logistics sector is being restructured significantly. As regards to larger countries, Spain is a concern, although Italy has been stagnating for so long, a crash here may be of only gradual impact. The US market is more difficult to assess. Its debt and budget problems are depressing demand and undermining confidence, yet there are clear signs that logistics demand is continuing to grow both in the domestic sector and for international traffic. Canada and Mexico are strong economic performers and are likely to expand across all logistics sectors in 2011. Therefore, global trends suggest demand is capable of supporting the sort of growth seen in the global logistics market over the past 6 months. As ever, the joker in the pack is oil prices. These are presently high despite moderate demand in Western markets. Even if a restrained recovery in consumer spending takes place in markets such as the US, the oil price might increase to levels capable of suppressing demand for transport.